Hi guys, in this lesson we are going to be talking about risk management, specifically risk management strategy. Now out of all the videos that I have created, that we have created here, this is probably the most important. Now I know I say all videos are very important, but here if you don't have risk management, doesn't matter if you don't have a broker, doesn't matter if you have the most amazing strategy. Doesn't matter if you have the tightest spreads or the lowest brokerage fees, or you know how to use TradingView like you're a pro at it. If you don't have good risk management strategy, just one simple statement, you will never be profitable, ever. And that's hand on heart from a prop firm trader, for someone that teaches people every day. If you do not have a risk management strategy, you will not be profitable. I cannot say it in any other way. If you don't have a risk management strategy, you are throwing money away. 90% of people that come into Forex never make money, they fail, they don't come back. Do not be one of those people. Listen to this, and afterwards, if you employ this and listen to everything that we say, make sure that you have a good risk management strategy, you will be safe. This is one of the first things that my mentor ran over with me. It's the first thing that every prop trader who's professional, who's long-term profitable, has got down to a science, an exact science. So, what is a risk management strategy? Well, say I'm on a live chart right here. For example, we can see that it's going to be slightly moving. We can even see that all our numbers are changing, so you know it's different. If I zoom in here, you'll be able to see that this candlestick is moving. So say for whatever reason, I'm thinking that this is going to go in for a sell. This is a short position, right? So anything in the green is my take profit. This is where I'm aiming to go. This is my stop loss here. Now there's two major things that we have to look at here. One is our risk to reward. Let's put that down, right? One, risk to reward. And two, lot size. Now I believe we have been over lot size already, and there's a separate lesson for that. So I'm not going to go into it in too much detail here within this lesson. Go back, look at it. But I will briefly be going over it here today. So don't fret, do go back and look over it, but I will give a small recap. So our risk to reward, what does that mean? Well, you can see here, risk to reward, the ratio is 1. Our risk is 1, reward 1, right? This, our red, our stop loss, is always on TradingView as a default going to be 1%. Oops, sorry, wrong one there. 1%. Just here. In fact, let's make that a little bit bigger for us to see here. 24. So this is going to represent 1%. Doesn't matter if it's all the way up here. Doesn't matter if it's all the way down here. Doesn't matter if it's even up here. This is always going to be, in TradingView, 1%. That is the default. Now, why is that the default? Just because 1's a normal number? No. That is because in risk management strategies, and it doesn't really matter who you're talking to, as long as they're a professional trader, as long as they've been in the markets 2-3 years, they're successful, they will tell you the exact same thing that I am going to be telling you now. Risk maximum per trade, 1 to 2%. Me, myself, I never go over 1%. So I'm always looking at this as 1%. And remember that the lot size, when we go over it, is how much you're actually trading with. So when you place in a trade and you put it in, you're always going to have your lot size. That needs to make sure that you only have a lot size that you are risking as 1%. How do we do that? Of course, we use our stop loss, we use the pair that we're on, and we use our overall account size. We've already been over this in a separate one, but our lot size also has to represent 1% of our account. So if you have $25,000, this needs to be, what is it, 25 bucks or 250 bucks? If we have 1,000, it needs to be, for example, $100. right? Oh, sorry, $10. My maths is not good today. And if it was $100, it'd be 1. If it was 10,000, it's 1,000, and so on and so forth, right? So it always needs to represent 1. Here's where you get the good risk to reward ratio. It's by moving this around. So what we're actually going to do when we place a trade is make sure that our stop loss is in a position where we think it's safe. We don't want to be having tight stop losses down here for whatever reason, or over here, or over here. There's 2 things that we need to look at when we are placing our stop loss. If we're moving on to something else here. 1, that it's safe, and 2, it's in line with our strategy. That's what we have to do. So if I was to randomly put it here, is it safe? Probably not. Is it probably more safer up here where all the wicks are? Definitely up here or around here. And if it's in line with my strategy, that's absolutely fine. Then I can keep it there. 2, I make sure that I am risking 1%. My lot size is equal to that 1%, right? Really simple. And now we look at our risk to reward. What we can see here is that it's a 2.21. That's because our stop loss is 16.6, and here we have 36.7. So let's make it a little bit easier for us to understand. Let's go and make it 20, right? If we move this to 40, for example, we can get it really close. 2.01. That's because our stop loss is 20 and our target is for 40 pips. We're risking 20 pips, but we're going for 40 pips here. Now this is very important because we do not in any circumstances, under any circumstances, want to go for a 1-to-1. I know there are strategies out there on YouTube, on Instagram, that are 1-to-1 strategies. Here's why I don't like 1-to-1 strategies. Say we're placing 3 trades over the course of a week. Just 3 trades, right? And we say, okay, we've got 1%, 1%, 1%. Now, what is a normal win ratio for the majority of traders is going to hopefully be around your 50 to 70%, somewhere in there. 60% is really good, 70 is amazing, 50% is average. And when you're starting out, especially, say our win ratio is 50%. And trust me, if you're out there and you're listening to this and you're thinking, actually, that's really low, I have been in this game for a very long time. I have a 63% win ratio, and whenever I talk to experienced traders that have 3 to 4 years in the market, it's amazing. When I talk to my prop firm colleagues, it's really good. It is really good to have a 63%, and I've been here for a long time. Am I saying that there aren't people out there with higher win rates? No, I have known a guy that has had a 90% win rate. However, he went for a risk to reward ratio of 0.60%. So every time he's winning, he's not even getting a percent. He is basically only getting 0.60%, and he's still risking 1% at the end of the day. And that's why I don't like this. And it's my own personal opinion. But saying the 50% out of these, let's make it just easy and we actually say we're going to place 4, just for the maths to be a lot easier here. Say we do 4 trades in a week, 50%, we know we're going to lose these 2, right? So we know we're going to lose these last 2, something like this, right? And we are going to win these 2 other trades. Now we have just won 2% and we have lost 2%. So what's our net gain there? 0%. We've just done 0%. If you manage to go on a losing streak and lose 3 or 4 in a row, then you're going to also be down 2% after that. If you get another 2 trades onto here, that's minus 4% plus 2. You've just lost 2%. That's why a 1-to-1 risk to reward ratio is not that good. Let's see with the exact same win ratio what happens if we draw this out to 2%, right? I'm not going to do it exactly, but let's say it is all around here. This represents 2%. We're getting 1 to 2. We're still risking 1% each time. We've just made 4% and we've just lost 2%. Our net gain, therefore, is positive 2%. That is what our net gain is out of 4 trades with a win ratio of 50. That's just 50%. Do 4 trades in a week, we make 2% per week. If you have 2% of, $100, it's $2. If you have 2% of $1,000, it's 20. If it's 10,000, it's 200. Make 200 on top of that. If it's 100,000, it's 2,000 a week. I know there's prop firms out there that will give you funded challenges for $100,000. If you're making 2% a week just by doing this, that's $2,000 a week. That's what you could be on. That's nothing to snigger at. And let's look at that. If we doubled it and say, hey, that's 8 trades, that's 2 weeks there, it's 4%. Then it's 6%, then it's 8%. So per month, you're making roughly 8%. If you do that on a $100,000 account over the month, that's $8,000. It's not a lot of money, but then you get to trade with $108,000 and build on top of that. And that is just 50%, guys. At 60%, it gets even better. The longer you're in this game, the more you withhold your risk, the better it is. Because this means not only can you win more guys by going for a minimum of 1 to 2, which is obviously what I'm telling you to do, but you can stay in the game for longer. Because when you inevitably do go through a losing streak, let's say we lose 4 in a row, that's 4%, but we win 2, that means we're at 0. We stay. We've just lost 4 trades in a row, we win 2, fine. And with our win ratio, we know that probability dictates that 5th trade is probably going to be a win. Probably going to be a win, just by probability alone. So risk management is extremely important in making sure that you're staying in the market for a long period of time. So just to go over and recap before I go over anything, we're always risking 1%, which means that our lot size that we are trading with always has to equal 1%. Our risk to reward ratio, realistically, and this is what I'll say to you, always try and find a strategy with a risk to reward ratio of a 1 to 2 minimum. Don't really be going for anything else, right? 1 to 2 minimum. That's what you want to be looking for. And then of course, try and find a win ratio that is a minimum of 50%. Make sure that is a minimum of 50%. With these things together, with all of these things and this risk management strategy, only risking 1%, you are going to stay in the game for a lot longer. If you double this to 2%, which some people do, of course you are going to elevate your gains because now you're risking 2%, but then you'll be gaining 2% as well, which are realistically, because we're risking 2%, we'll be trading with more money. This is going to be worth more. This 2 here is realistically going to be 4% there, right? Because we are going to be trying to get more money. We are playing with more money. That means we get more money at the end of the day, right? That's what we're looking for, okay? So remember that. But if not, you have to make sure that you are increasing this. You are increasing this. You increase the amount that you're playing with. Make sure that you're increasing your risk to reward. The more money that you risk, the more losses that you are going to accumulate, or the greater the losses are going to be for you there. So if you are risking 2%, you need to be making sure that you're going for 3-4%, roughly somewhere around there, maybe even more, right? Because we want to be making sure that we're always winning more than we're losing. And you can do that while you are back testing. So yeah, that's basically it from me, guys, here on risk management. At the end of the day, it's just about being really careful, making sure you do have a good win to loss ratio or risk to reward ratio, minimum 1 to 2. We're always risking 1%, and as I said, you're going for that risk to reward ratio of 2 here, 1 to 2. Our lot size is always equal to 1%. So when we are trading, we've calculated a lot size. That means whatever we do, if this is this high or this high or this high off the screen, doesn't matter. We're always risking 1%. Doesn't matter how big our stop loss is. We calculate that lot size to always be 1%. But obviously if we have a bigger stop loss, we need a bigger take profit. And in this case, it is easier to find a strategy with a bit of a smaller stop loss, because is it realistic that you're going to go 100 pips every trade? No, it's not. But hopefully, with all of this, you understand and you'll move forwards and you'll take this into consideration, start implementing it straight away. Anyway, guys, if you've really enjoyed this, if you have any questions, please message me or leave a comment here, give us an email, I should say, and we'll get back to you as soon as we can. But until the next lesson, guys, have a great day. Bye.